Okay, good morning, everybody, and thanks for dialing in and joining the Siguiri Gold IPO presentation. So we have Michael Minnesota, the chairman, who's joining us at the CPS office, and Henry Heaney, who's joining in from New York, I think. So we'll just we'll run through the presentation, and then we'll keep questions for the end. And questions, if you want to message on WhatsApp to me, and we'll address them at the end of the presentation, or use the Zoom system. So Siguiri is a company that we've been following for close on to 2.5 years now, I think, and now's the right time for it to IPO. So it was priced at when gold was $1,800 and circa $50 last November, and we're looking at cracking 2,500, I think now. So I think it's an advanced stage exploration play, so a lot of the exploration risk has been taken out of it, and it's in Guinea, a country that investors are happy putting money in, as evidenced by recent raises. And in particular, predictive PDI is the code on ASX. Its market cap is $500 million plus, started out in a similar position to Siguiri at circa 20-odd million valuation. And the plan is to copy predictive effectively at the end of the day, and with putting our own twist on it with the assets we've got. So I'll hand over to Michael. I think you're going to do the presentation, and we'll have the presentation. We'll take about 20 minutes, and again, questions we'll keep to the end. And it's a simple, easy story. Value steps along the way equals higher market caps, and where we go. Over to you, Michael. Thank you.
Right. Thanks, Jason. Keith suggests that at the beginning that Henry and I give a bit of a background on who we are and where we've come from, particularly in relation to this project. So my background was that I was a long-term partner at Ernst & Young, now EY. I subsequently worked through Woodside, Fortescue, another capital markets group, and then found my way to Guinea back in 2015. So I've been in country now for something like 9 years and have one particularly successful project happening there today. I first got involved in Siguiri through an invitation from Henry in about 2022. Came in initially as an investor, sat in the role as chairman. There was some changes with management, then became more involved day to day, simply because I really love the project. So Henry, just a bit of an introduction, how you came across Siguiri, and then we'll get into the company itself and the project.
Absolutely. So maybe as a way of quick background about myself, I originally grew up in Canada. After UBC, I joined Bank of Montreal in the metals mining practice. Found my way down to New York subsequently, where I was at Evercore Partners in their M&A franchise, mainly focused on sponsors, and then was at a hedge fund called Maple Lane Capital, where we ran $5 billion. I ran their cyclicals practice for 8 years before starting my own private equity products, both first in the real estate side and then subsequently in that of mining. Our team, Heaney Capital Resource Partners, has about 12 professionals on a global basis. We've invested in 5 different development stage assets, with Siguiri, of course, being one of them. As Michael was alluding to, we initially came across this project in the team December of 2020, attracted to it by the notion of these large kind of artisanal pits we were seeing on surface, this kind of, if you will, blanket of oxide material. We found a group that had been in country for about 15 years previously. I started working with them, capitalized the entity in which that they had, and then Michael, of course, came on about 2 years subsequent. We found the asset extremely intriguing from that exact basis, and then, of course, have been advancing ever since.
Thanks, Henry. So on to the project. As if we start going through the presentation, perhaps that's a perfect page, Keith, thanks. Some key things to take into account here. we own 100% of the assets. So that's unusual, particularly in Africa, and we're happy that we're in that position. The actual assets are located in the Siguiri Basin, which is within what's called the Birmania Greenstone Belt, and that belt goes through Mali, Burkina Faso, into Guinea, and hosts many of the mines that you see are now being sold to Chinese and others, and they're being developed here in Australia. So folks like Tieto, others, they all get picked up in this same wave of developments. Guinea's largely been overlooked up until recent years, and probably until Predictive came along a few years ago. Having said that, what you'll find is that we actually sit 10 kilometres south of the AngloGold Ashanti gold mine, which has been operating successfully since 1998, producing today something like 270,000 ounces of gold a year. And it looks like it's going to be operating based on a recent discussion I had with the AngloGold folks through to 2039. So we've got a very good address, but we'll go into more detail shortly on that. The company is an advanced exploration project. It's, as Jason said, we have spent a fair bit of money on the project already. We've drilled approximately 33,700 metres. We've proved beyond doubt that we sit on the same geological structure as the AngloGold Ashanti mine. Now, it's well understood in terms of the geology of that particular formation and its characteristics. So we've got a great comparable right next to us. On the slide that you're looking at now, you can see that there's been some work done by a company called Golden Rim, or it used to be Golden Rim, it's Asara. I won't comment on that company too much, other than to say we're glad they drilled up towards the bottom of our more southern permits, because it proves what we think is a very exciting address for us to go forward and develop. So moving on a bit, some of the opportunities that are coming forward in the next 6 to 12 months include we'll be drilling an initial 30,000 metres out of the funds of this program. That will deliver a few things in the medium term. So the key points are that we will be releasing some drilling results from drilling that we conducted towards the end of last year, beginning of this year. That's on our west claim, which I'll come back to. Those results will be coming out sometime at the end of September, beginning of October. And by the end of this year, early next year, we'll be releasing a maiden resource. My expectation is it'll deliver somewhere around 2 million ounces. Why am I confident in saying that? Well, we've drilled, as I've mentioned a few times, 33,000 odd metres. So we have a very good understanding of what we are sitting on today. A lot of the drilling that will take place will be focused on infill what we already have, so we get more confidence in terms of what we have. But there'll also be some deeper holes and some extension drilling. The extension drilling really is just going to move out to something like 30 kilometres of strike, which we know we have today. So we've got lots of land available to us to go forward to extend that resource, which we'll release next year. And then there's a big unknown, and that is, what happens when we go deeper. So most of the drilling that's happened up until Predictive a few years ago in Guinea and neighbouring countries was very much focused on the oxide ores. And what Predictive has brought to people's attention is that in the fresh ore, you're actually getting, in many cases, higher grade outcomes. I'll come back to that again in a minute. So we've got really everything before us in terms of proving up a very useful size project. Now, what is useful size? In our world, in Siguiri, useful size is 200,000 ounces a year production for at least 10 years. and probably much further. But that's our first stopping point. What I'd then go on to mention is that the Siguiri ground position, which reflects the SAG ground position, which is just 10 kilometres to the north of us, is characterised by oxide material, which Henry mentioned. The great thing about oxide material is it's free dig, so no drill and blast, very simple two-stage crushing circuit. Great metallurgical response. You're getting anywhere plus 95, 96, 97% recovery of gold. So what you see, what that means from a practical point of view is the following. The capex of establishing a project is low. The working capital requirements are low because you simply go into production in the first shovel you put in the ground. Strip ratio is low. It's going to be 1 to 1, maybe even less, as the gold comes from surface. So the capital cost hurdle is low for us. We then roll into the operating cost side of things. If we look at our neighbours, SAG runs at about $1,100 US an ounce. Keep in mind that project's been going for 26 years, so it's getting a bit old. They're trucking material from a long distance. They're going deeper. We don't have those costs. My estimate, and benchmarking against Nero and other data points that surround us, we'll be probably operating at an all-in sustaining cost of somewhere near of $850 US an ounce, maybe less, maybe a bit more. But compared to today's gold price, a very healthy margin means quick payback, which importantly means easy financing for the project. If we just move on a bit, please. If we'll go, I don't think I'll comment too much more about Guinea. It's the go-to address now. We've got Rio there with its $27 billion co-investment in Simandou. You've got, as Jason mentioned, got Robex just funded Kiniero. They went out for 50 million, came home with 126 million, and Predictive have raised about 90 million last year. There's lots of markers that tell you that Guinea is a good place to be. What you see on the screen now is our camp. What Henry and the team, and predating them, Michael Mulvey and the founders of the actual project, is they went about setting up a camp for the future. So this is unusual, but it's really important to note. What you can see on that is that we've got yellow goods on the right-hand side. So those yellow goods we use for fast-tracking drilling, also enable us to make sure that the operation always ticks along, allows us to work usefully with the local community, and all that put together gives us a really good position in country, not only with the local community, who we've got a great relationship with, but also the central government. And the other thing I'll just note to you of interest in that slide is on the left-hand side, you can see the remnants of an old gravity circuit. And so this is the reason why the guys actually went to this area originally. So that was Mick and Dan. They set up this gravity circuit and tried to have a sophisticated operation compared to the artisanal workers. And they actually did pretty well out of it. They were getting recovery something like 85%, simply by driving a front-end loader into some artisanal workings, picking it up and putting it through the plant. So it wasn't a bad earner for them, but it just goes to show you the simplicity of the metallurgy and the opportunity for us looking forward. Keith, next slide. So where do we sit? Actually, we go back just one slide. So if you look in the distance, no, that's fine. If you look in the distance, the bumps on the sort of middle towards the left, the bumps that you see in the horizon, they're the actual SAG heaps from their mining operation. SAG's putting through, I think, 25 million tonnes a year at the moment. They're treating lower grade material and will be treating, but just again, it's a great marker for us because it gives us the the template, what we need to build. Keith, sorry. So here we have a bit more detail on the project itself. So the 3 red described permit areas on the left-hand side are ones which are currently held by the company and are going through a reapplication process, which you'd be familiar with here in Australia and elsewhere. It's just dealing with the government, getting renewals, or getting, in our case, what are called exploitation permits, will allow us to do a bit more work on the properties. That whole land area is not vast. It's 148 kilometres, but it's really focused. It sits exactly on the Fotoya formation and some parallel geological formations. We don't have an interest in owning half the country or having coverage of half the country where we know where the gold is. The yellow described areas there, these are areas that we're in various stages of either application or negotiation with in the government. They're not a must-have for us. We expect to be granted to that. They'll be granted to us in time, and they're all strategically located on the Fotoya formation. In time, we'll pick those up. If we pick them up, that's great. If we don't, it's not really a big deal for us. Certainly in the next 5 to 10 years. Just some on the other side. You can see some. It's not that clear, but you get to see some drill results. But what those images are telling you, we're actually getting grade from surface. Sometimes it's 0.5 gram, sometimes it's a couple of grams. But what it means is, gets back to a point I made earlier, very low strip ratio and very low cost mining operation. Again, this is...
I was going to say, maybe Keith, I just went back to the last slide really quickly. I think what's also important to highlight too is just the grade kick we're seeing in the fresh rock. As everyone kind of looked at those 2 different cross sections, first on the left and then on the right-hand side. You kind of see that oxide material, if you will, kind of 50 to 100 meters or so, right directly from surface, free dig, all directly there, no drill and blast required. But if you kind of turn your attention to what we're seeing there at depth, first in Tamba, the 59 meters at 2 grams, and then subsequently Cocoon, if you look at the right-hand side, 30 meters at 3.3. Those are pretty attractive grade hits as we think through what that could be. And as we start to drill this out deeper in the better part of, let's say, Q4 of this year, that's, of course, something that we think we can expand on. But so far, we've only gone down to just about 100 meters or so of true vertical, making this a pretty interesting kind of opportunity. But sorry, Michael, back to you.
No, thanks, Henry. So moving on a bit, a little bit more focus on one of our target areas, which is called Tamba. So Tamba sits there on the top right-hand side of the right image. Very good grade results that are coming from there. Again, what you're seeing there is that we've just got, we're open along strike, and we're butt up against another project or another concession on our south side there, and we'll pick that up in time through negotiation, but no need to do it today. But again, great drill results. The question for us is not if we've got more, it's just how much we've got more. And that applies to Tamba as much as it does to Cocoon, which I think we might see next if we move on to that. So Cocoon, again, we've got something like 700 odd meters of total strike along, 7.5 kilometers of total strike along Cocoon Mog, which Mog runs, Cocoon runs into Mog. So again, it's not a question of if we've got gold, it's just a question of how much we've got gold, and what are the grades and how are they connected, each of the deposits connected. But with the drilling, with the 33,000 odd meters we've drilled today, we have a pretty good idea where we're going to be going on that. So what's our focus? I've covered this in various areas previously. It's really to come up with the maiden resource at the end of this year, early next year. The main resources are going to come from where we've already drilled, so there's effectively only infill drilling required there. Very low risk of that main resource coming to pass. As you can see on the top right-hand side, on the two right permits that are shown there, we've got lots of targets, have every reason to believe that the resource will grow substantially over the next year or two, just based on those two permits. Now, what's really interesting on this slide, which we haven't mentioned before, is the west permit, where that's described as anomaly drill testing. We put just under 10,000 metres of shallow drilling through towards the end of last year, beginning this year, and we've got some good results that have come back. Clearly, we've got an extension of what we've got, or not extension, but parallel ore bodies to that which we have on the north and south claim. What we expect to get out of this drill program when we do release the assay results come to the end of September, October, is just confirmation that we've got on the west permit more of what we've got on the north and south permits. Our job on the west permit after that will be to go deeper and just understand the extent of what we've got there. I think that's about it. That's more about just the presentations on the website. You can go through the presentation. You know, we've reported all the more notable hits in there. And really, it's just, I keep coming back to this, just drilling, and that's it. If we move through the next few, this is an interesting slide. So we've got a sample plant. It's a which is actually sitting in port in Guinea at the moment. There's a couple of containers that are landing there in the next week. I think it's the next Monday, actually. The sample plant, just a bit of a nuance, because we're thinking ahead. Our objective is to have a feasibility study done sometime towards in the next year. We know we've got the gold. We know we will get the tonnes. We know what the plant needs to look like. So we've engaged Como Engineering to do that work for us. And they've already given us some headline numbers and some anticipated operating costs. The reason for the sample plant is that we could send bulk samples off to various labs to do it, but we thought a smarter way of doing this was to build a sample plant, which we did, and that was fabricated in the UK. The interesting thing on this sample plant, which has a throughput of 200 tonnes per hour, we'll actually make money on that. We'll spin off 100 to 200 net, 1 or 200 US thousand a month net, whilst we've got that operational. So it's really, it wasn't the intention to be a cash generating endeavour. It was all about the metallurgy. This just happens to be a bit of a free kick we'll get. So we're getting cash flow, which will then obviously go straight into drilling and meat costs. So a nice sweetener, but I'd like to say our plan was to generate cash. It was actually do the metallurgy. Just as it turns out, we're going to make some cash out of that. So that'll be up and operational, I would say. It's been delayed a few times because of getting various pieces of equipment, but it feels like the end of September we'll be up and running there, which will be good. You know, it's all, I've mentioned this a few times, low cost mining, whole operation will be low cost. We've got a town nearby us, which is Siguiri, which is the namesake of the area, as you would have worked out by now. And there's a landing strip there that we use, which is actually run by Anglo Gold Ashanti when we have the luxury of flying up there, which doesn't happen that much at all, actually. But sure beats driving for 14 hours. The free dig I've talked about before, not much more I can add, but happy to deal with any specific questions on that. If we keep scooting through, Keith mentioned a few times of the strong community relations. The guys like Max and Dan in particular, and Adama, who's our in-country manager, they do a fabulous job. and we've got 5 communities around us, and we've got 16 of their team or the community people working with us, staying on camp with us, and that gets ramped up to about 40 people when we're drilling. So we've got good access to labour, and very peaceful people, and no issues whatsoever. Notably, we're in an area where we're welcomed. It's generally an agriculture-based area, so people are really self-sufficient in terms of what they do. We provide them some help on their farming operations. And Max, the guy you might see, is a guy with sunglasses on the top right-hand image. He's a Canadian guy who has really embraced the idea of working with the community, helping with their small agricultural projects, and it's a bit of a winner for everyone, actually. We go on a bit. I won't go on to much on who's in the leadership team, but we made a big investment in country. So Michael, you see there, he's one of the founders, is also Chief Operating Officer. He's in country. Andre, the exploration geologist, as you'd expect, he's in country quite a lot of the time when needed. We've got Dan James, an absolute legend in my view, and he's pretty much permanently in camp. He's ex-UK, and Max I've mentioned, and we've got one other fellow called Anthony. So we've invested heavily in people in country, but what that means is it enables us to operate very simply. It gives us a really good standing, or provides us really good standing with the Ghanaian government. All these things matter when you want to fast track a project and get things done. Keith. Henry, maybe I'll pass over you on the capital structure and financing.
Sure, happy to do so. So the offering is we're raising 8 to 10 million Australian and a 23 Canadian, 25.8 million pre-money valuation Australian. About 129 million shares outstanding as we kind of think through that on a pre-money basis. And what's probably interesting about the share structure here is that just over 40% of the shares will be locked up between that of management and board, as well as others. Everyone is heavily aligned with that of the rest of the equity. Michael, myself, other principals, and also the rest of the board, all are heavy shareholders of this name. And then as we kind of think through just the long tail here, there's about 310, 320 shareholders as we look at the registry, thus potentially negating the need for that spread dynamic that tends to happen when you take these things public in Australia. From our perspective, that's quite intriguing. Also, the kind of lack of diluted instruments, and let's say only about 5.6 million options outstanding, all of which are held by Michael and our in-country manager. So in totality, very tightly held kind of register in that respect, that we think obviously could be quite positive as we think about the post-market basis.
I think we've been through that. I mean, the key takeaways here is that it's going to be a very tight register. Henry mentioned the existing approximately 300 shareholders, and most of them are actually going to be escrowed in one form or another. And particularly, there's a good number of North American shareholders. They're going to be subject to a different escrow provision under the BC securities law. So there's not going to be much stock coming out anytime soon out of that. And certainly, as Henry mentioned, management and the founders and others are going to be locked up for a few years, so which we're really happy about, because that's where we think we're going to be creating some real value over the next 1 to 2 years. Right. Okay, so if I just run through the timetable, we're just waiting on, we've obviously lodged the prospectus with ASIC. We're just working through some of their questions now. We expect to get approval in the next day or so. The questions relate to the permit, status of permits and the renewal process. We've dealt with those questions, and we expect, as I said, to get approval from ASIC in the next day or so to go live, which I'm sure that will be managed through CPS and the like. We already have interest and commitments from a number of substantial cornerstones. So it's not going to actually be too much out there on the offer.
Cool. So just a couple of questions, Michael. Just can you explain what a CDI is? Just for
Yeah, so CDIs, it actually comes out of the fact that this company is a Canadian listed, Canadian registered company. So we had to come up with a well sort of understood instrument called a CDI. There's quite a lot of examples on the ASX that trade CDIs, but when you think CDIs, just think share, and that's exactly the same.
so it's generally an overseas share listed on the ASX.
Yeah.
So just another question. Drilling costs, all-in drilling costs in Guinea compared to, say, a jurisdiction like Canada or Australia?
Oh, sure.
What are those costs?
So there's a couple of observations I might make here. Well, there's substantially less, and I might hand back to Henry because Henry's has some thoughts on that. But you're
Sure.
running literally at probably a cost of less than 40% actually in Guinea. One of the things you'll see on our source and uses of funds is that we're actually acquiring our own diamond drill rig, and it's now becoming a thing in West Africa. And in comparison to Australia, we'll be running on a per metre basis at probably 35% of the comparable cost, even in Australia. And compared to Canada, it's going to be much less on a per metre basis.
35% off or just off?
35%.
So,
off.
yeah.
So if it's
So I
$1
think
cost, it's 35 over there.
Yes. So I'd probably say about $35 per meter of RC is what we're being quoted right now, down to about 100 meters or so, with that stepping up a little bit as you get down to 100 to 150 meters or so. What's interesting, and Keith, maybe I think on the next slide, there might be even a buildup of kind of the source and uses. Yeah, exactly. So the drilling rig there on the top side there, as we look at external cost, whether that be capital, whether that be kind of ore search or what have you, in country, that's usually about $120 to $130, $140, we'll say, per meter on just the drilling side. We think that as we do our cost build up from kind of bottoms up, we'll be able to get down to about, let's say, $30 to $40 per meter for diamond with that of our drill rig that we have there. So if you will, that cost to delineate ounces is going to be very, very low, which is quite intriguing as we think through that opportunity. And then probably just building on that further, what gives us the confidence that we can maintain that and work through that ourselves is if everyone recalls back to that kind of camp slide and all the yellow equipment or orange equipment that Michael called out, that ability to do the pad prep, all the various different works with the bulldozers, backhoes, Lord knows what else, allows us to move quite swiftly as we work through that. And then, of course, able to maintain that through our mechanical help on site directly.
Do you want to just explain the EMS debt repayment, Lance?
Yeah, sure. So the EMS debt repayment that's shown on there and goes back to the founders. So that is Dan and Mick. And where what they did early on in the the company's existence is they borrowed money from a third party to start developing the project. That money's been outstanding for some time. So we'll be doing a part repayment of that debt to EMS, which will then be repaid onto the folks that they borrowed the money from. And there's a bit of a tail of about $250 US outstanding after that. That will only get repaid from any net proceeds on a formula basis from the operation of the sample plant. So that's the background on EMS debt repayment. All the monies have just gone into the ground, basically.
There's no security on this.
Sorry?
No security.
No security, no nothing. No security, no interest, just sitting there.
Yep.
Yeah.
So guys, just regarding the independent geology report, what does that sort of say for any potential size of resource in that?
The report itself, as you'd expect, doesn't forecast the resource size. What it does say is that we sit on exactly the same geological formation, as I mentioned a few times, as does Anglo Gold Ashanti. Anglo Gold Ashanti, after 26 years of operation, has an estimated remaining resource of 9 million ounces. So, you know, what are we going to come up with? I mean, I think our first point is to get to the 2 million ounce resource, and that's the trigger to go ahead with the project. We took a low conversion ratio to reserve of say 50%. That's 1 million ounces. It's 5 years worth of startup production, and we'll continue to drilling. I would be really disappointed if we ended up with less than 5 million ounces realistically in the next 2 years. I mean, it's not, again, I keep stressing the point. We know where the gold is. We know where the strike is. We know what the geological footprint looks like, because we've got Anglo Gold Ashanti to the north of us. All our drilling confirms that we sit on the same type of ore body. The IGR is very positive in terms of that. The guy who actually wrote the IGR was exploration geologist for Anglo Gold Ashanti for about 7 years at the SAG mine, so he knows the area. The IGR is in the prospectus. Have a read for yourselves, but you know it's great. It's a very simple oxide-focused project with the kicker that we may have some real potential going down deep. My view is simple: get into production quickly, get it to a meaningful size. It's the 200,000 ounces a year at low cost. Start doing the maths, and the maths sort of work out 200,000 ounces a year. Let's say a margin of $1,400 an ounce will give you a sort of a net view of the annual profitability, and you're going to multiply that number by, let's call it somewhere between 5 and 6 or 5 and 8 or something. So in any way you look at it, there's real value there. Question that sometimes gets raised is, you know, what sort of funding do you need to get this project off the ground? All indications are about 175 million. If you do your maths, you know, that payback is less than 2 years and makes it a imminently financeable project. We don't have a long startup period. It's short. We don't need to go down deep to get the gold. It's that surface. The actual process plant, really simple. 2-stage crusher. The back end, again, simple gold circuit. And you know, all this stuff is off the shelf. We don't need to do anything that's new, innovative, other than make sure we're using the current best technology, which we will do.
So that's a valuation on, call it a PE, if you like. So what would 5 million ounces in the ground be worth if you hit that as a resource based on comparables on the market?
Look, 5 million, or a starting point, undeveloped project, you got predictive. You got predictive sitting at 400 or 500 million. That's the starting point. And that, you know, they've got a massive capital hurdle to get over. Ours is a fraction of theirs. So, you know, as we move to having the real project up and running, we'll get re-rated along the way, which is pretty natural.
So you guys are the same. You said you're on the same geological formation as Anglo.
Yeah.
Comparing yourself to predictive quite often. Is that the same? All the same formation? Or
no,
not?
they sit on a different formation.
So why is everyone making so many comparisons to predictive when Anglo is 2.5 feet away and so valuable?
The simple reason is, you know, they're close to us in terms of development. They're still a advanced exploration play, and that's the only reason. And the ounces are, you know, our ounce target is similar to their ounce target. It's not to do with the geology. The geology is absolutely the Anglo Gold mine. And it's not only Anglo Gold. We've got Nord Gold, Lefa project, 68 kilometres north and northwest of us as well. So that sits on the same geological structure.
I guess the analogy to predictive as well is because of investment in Guinea as well.
Yeah.
You know, more of the strike.
Yeah.
Of the 33 ounces that
33,000 metres. Yeah.
meters been drilled, some results been released or all have?
Oh, yeah, they're all out there.
Oh, they're all out,
Sorry,
okay.
23,000 metres is out there.
Yep.
The last 10,000 metres that we drilled, we're holding those back because if we start releasing them, we have to redo the prospectus,
Yep.
and that's a nightmare.
And then the 30,000 extra metres to drill has
Yes.
started?
No, they'll start once we fund.
Okay.
But we're ready to go. So, we've got a hold place or a placeholder on the drilling rig. So what we'll do is we'll use contract drillers until that rig arrives. They'll take maybe 6 to 8 weeks.
Okay. So if you get the 10,000 metres results out, say once you've listed after, just after, the following 30,000 metres, you'd expect that you'd release results as they come.
Yeah, absolutely. Okay. Yeah.
Yeah.
And they'll start
Yeah,
in
no,
October.
How many meters can they do a day?
Usually they can do, what is it, Henry? They can do about, depending on what you're doing, say diamond or.
Yeah. So we can, so it really depends on kind of the throughput, you know, if we've done the pad prep, et cetera. But if it's RC, we can get through about, let's say 250 to 500 meters a day, kind of depending where we are, the depth, et cetera. So we can move extremely quickly on that basis. So as you kind of think through, for example, some of the work we've done in the Western concession, that can be pounded up quite quickly. As we start thinking about diamond, of course, as everyone might imagine, that will be slower, especially as you're testing what's there at depth. But the speed at which we can kind of work through these is quite high. If we were to pre-collar some of the holes rather than, let's say, going down 100 meters with RC and then handing off to diamond, that obviously allows us to move pretty swiftly as well. And I think that kind of dovetails with let's say, the upcoming catalysts. You know, as touched on, you know, there's 10,000 meters or so that's yet to be released. So that post that listing, that will come out. And then also testing and showing, let's say, the continuity of what we have there on the north and south concession, and what we have down there at depth, as well as that the footprint of what we have in the western concession, kind of firming up the thinking around that. And all of that will kind of, let's say, roll into that of a maiden resource in the first half of next year.
What about lab result timing?
Very quick. So we use MSA and they use this photon technology. We get results probably within a week now.
Yeah, right.
Yeah, very good. There's labs, the labs are all in Mali, but now the technology, you can turn it around quickly. And it's just a question of how can we send a truck across with the samples. The results come back usually within a week.
Yep.
Yeah. So.
Good. Okay.
No shortage of information.
Yeah. Okay, thanks, guys. That's all the questions there are. So if there's anybody with any other questions, just email us through and we shall answer them. So I'm just reading a couple which we seem to have covered off. Do you want to comment on that? So one question there is on the capital consolidation. So
yep.
Any capital consolidation, from what I understand, hasn't affected the shareholders that have come through CPS.
We were banged over the head by Jason and Keith, and the consolidation that happened was designed to make good any of the CPS shareholders.
Yeah. So if there's any specific questions, we can answer those. There's a question there on sovereign risk, but I think we've covered that off with the comments on predictive and the team we have in.
But I might just add to that. As I mentioned earlier, I've been in country since about 2015, and I've never had anyone put their hand out for money. And one of the projects that we did was a very big project, which continues to operate. The current Minister of Mines actually worked for me back in those days. Very good guy. He's very progressive. They are actually trying to come up to a developed world standard in terms of their geological reporting and geological administration systems. That's actually created a little bit of a delay in the last few months because they effectively kept on hold things like renewals and new applications and the like. I actually think they're doing the right thing. It's a bit annoying from my point of view, from a company point of view, but I've got high levels of confidence in the government and importantly, the administration of government. I can literally pick up the phone any day and talk to the minister or the head of CPDM, which is the department that does or runs new applications, etc. So I'm really comfortable. And the reality is, there has not been one instance of in Guinea of permits being taken off any group that's acquired them appropriately. The only instance that there's been any type of change in ownership is tied up the Simandou project, where there was some corrupt activities which the government stamped on, and that's sort of now it's sorted, and Rio and Winning Group are on their way. So very sovereign risk is people talk about in West Africa. Africa is not one country, it's a many number of countries. Guinea is not Mali, it's not Burkina Faso. Guinea is a very safe, very peaceful country in terms of the population. It is about 85% Muslim. I'm really relaxed and walking the streets. I'm going to go there every few months. Very safe. It's a westernized form of Islam. Yeah, I mean, I can't speak too highly of the country actually, and I'd be very happy to invest in the country at any time.
Good. Okay, so we're just waiting to open the offer post ASIC's exposure period. So we imagine that'll be in the next day or so, and we'll send out the normal emails. Existing shareholders, as in all our deals, will have priority. So away we go. Thanks everybody for your time. Thanks, Henry.